Let's bring in Brent Thill, Jefferies tech analyst, for more. Brent has a buy rating on Salesforce, just raised his price target to 300 from 275. Why is this coming as such a big surprise, these numbers, Brent?
I don't think it's a huge surprise. I think software's been lagging other sectors like semis and the internet, and we're seeing a catch-up trade. We're now seeing seasonality. We're seeing some of the thaw of some of the software spend we saw post the interest rate hikes. So I don't think it's a super surprise. I think that ultimately the backlog numbers and the large deals that they're signing, it is a surprise. And as they highlighted in the call, they don't want to call it a comeback. They don't want to call it we're back to normal. They were careful about saying that, but I think ultimately our thesis has been that semis will be the first wave of AI, and software will carry us in 24 as these products come out and you start to monetize. So you want to be ahead of that as an investor, and we think investors are now starting to look at the rotation perhaps of some of the semi money they've made back into software, as well as many other factors. The rest of the software industry is getting stronger. You saw great numbers from Adobe, from Microsoft, from Intuit, from Workday. I mean, this isn't just a one-off. This is the industry, and all the platform leaders are doing very well right now.
So it was the setup that was bearish that you think is leading to the response today. So was AI the swing factor here?
AI was not the swing factor. I think the setup, the stock had a huge move, right? We're up massively in all these large cap names. So I think ultimately the tone was less bullish. There's no real big product cycle. They're executing well on their multi-cloud strategy and getting these big deals signed. I'm in Vegas for Amazon's conference, and the belief is they signed AWS as a big account this quarter. So, I think you're seeing several factors that are leading to this, and a lot of investors have been underweight software, not believing that the turn will come until next year. So I think, again, there's several factors that are leading to this, and good execution on Salesforce's behalf from their field.
So, to the extent we're focused on 24 and the ability of these software companies to use predictive and generative AI to fuel their businesses and or their product offerings, so we're there now. You think we're in that moment at this point, Brent?
I think we're at a moment, and I've been very cautious about this, that AI today is all hype. In terms of the revenue reality, it hits in 24. And we're starting to see early signs of that. We had a dinner last night with many experts that work in the software industry, and what they're seeing is there's more hype than the clients are asking. But the clients are getting prepared. They're getting prepared. The surf analogy is the wave isn't here, but they're getting the suntan lotion and the boards and their towels ready to go, and they're waiting on the beach. They don't know exactly where to go. Where's the wave going to go? And they're looking for that advice. But we think that is coming in 24. You look at Microsoft, less than 50% of their AI products are even out. Next year, 100% of their AI products are out. And then enterprise adoption is slow. So we'll see the beginning of that revenue wave in 24, and then into 25. All the hype is here. The hype is beyond anything I've seen covering tech for 20 years, and I believe in it. But what I don't believe is that it's not having an impact right now. That will be happening next year. And we're advocating you want to be ahead of that as that builds through 24 into 25.